This conference will now be recorded.
Good evening, ladies and gentlemen. This is Clueless Trading Frank. It's approximately 8:49 p.m. on January 13th, 2021. Welcome. This is our midweek strategic webinar that we conduct every week. This session will be recorded, uploaded within 20 to 25 minutes on the real-time Twitter feed that you all follow as members and free trial subscribers. So you can click that link and listen to it at your own time. And either by tonight, if not by early tomorrow morning, it should be up on our fantastic Clueless Trading YouTube channel for further viewing by everyone and anyone out there with the internet connection. So please, like I always say, spread the word around so people can listen and see, somewhat peek in, and see why we do what we do and why we do it, I think, overall a lot better than most people out there. That's basically it. Full disclosure, this is purely for financial education, not for any solicitation or advice. And let us begin. So first and foremost, one of the most monumental short squeezes for a New York Stock Exchange stock, that was GameStop, one of the stocks that we own as a swing trade, happened today. Without using big $10 words, let's put it this way. It was beyond monumental. There were some catalysts that have been brewing in the company because we've been trading that GameStop on a swing trade basis for quite a few months now. You all know that. And I even suggested buying the stock again yesterday afternoon, the stock and the options for February, as well as just adding the 2, 3, 4 cent penny options that were about to expire on Friday, which was the Jan 15 30 calls, which I had mentioned a while ago. They went up, then they kind of slid, stayed there. Then as time goes on, they kind of lose time value, and they were trading anywhere between 4 to 10 cents over the past week or so. And those are the lottos. Those lottos went up, and get ready for this number. Those lottos, and I'll show it to you, went up 50,000%. Now, you didn't hear me wrong. It's not 5,000%. They went from roughly 2 cents to a high of almost $11. That's why it's monumental. And that's why one of the points that I want to make, there is no rule that these things, that's why it's called a lotto, is that even if you have some just lying there on, some stocks and because once the lottos depreciate value, they're meant to be put on the loss column while you make money on the other side, and net stay positive on your P&L on a weekly basis. I know a lot of new traders think that they need to be positive on their P&L, profit and loss statements on their accounts every single day. That's a fool's game. Just telling you this right now. The days that you're red on your P&L and you're scaling in at dollar cost averaging and buying certain selective issues, bringing down your cost basis, whether it's a stock or whether it's an option, specifically on the options, are the days that your P&L are most probably going to be red. And within 24 to 48 hours, depending on the technical status of the market, which I appraise everyone all the time during the day, that's part of the integral part of our service, you're probably going to make a lot of money, because that's what volatility is all about. Now back to GameStop. Okay, I just put a little what do you call, cover page of what's a short squeeze, just so people don't understand. Okay, I mean, some new traders probably don't know what a short squeeze is. So look it up with Investopedia. This is from Investopedia. And let's get this screen out of the way. Now, the reason what happened with GameStop, and the stock most probably is going to go higher. And I'm going to say that I was directly from Thinkorswim, because it was very well written by an analyst. GameStop was it's kind of unheard of, had a short position which was larger than the outstanding shares out there. Their outstanding shares are somewhere around 68 million shares out there. Not a heck of a lot. That's why small caps move very big when they move. And supposedly, and this really was like blew my mind. Supposedly, they were 1 second here. I'm going to bring this in. Supposedly, there were best case. 1 second here. They were more than that. Instead of 70 million, there were there's 69. Well, GameStop has 69.8 million shares outstanding. The short interest rose to 71.2 million shares. So that means there were a lot of naked shorts, and I bet you these are hedge funds. Okay, I bet you these are hedge funds. And this is very critical for all our members to know that this kind of stuff, when it happens, will create a monster squeeze which will go in the history books, like it happened with GameStop today. Not only in the options, let's show the option chart to you guys also. From 2 cents to $11. That's almost 50,000%. And again, I repeat, you didn't hear me wrong. So even if you had 2 calls, you'd have made a shitload of money just by letting it go. Let's say you had 2 calls at 4 cents. Okay? And at $10, those 2 calls would be $2,000. So it's like crazy. So don't expect these things to happen too often, but they do happen. So basically what happened with this, and this has to be, all members should be aware of this, very important, that the largest one-day percentage gain ever, according to Dow Jones data. I mean, hey, we made history. Let's put it this way. This is one of our swing stocks. It's still one of our swing stocks. And we were there to a certain degree. And I did remind everybody to buy yesterday specifically the February 1922 calls, which went up approximately 600%. And the best part is that the stock still held up there, down a couple of points, obviously. It almost hit 40, ended the day at around 33, high 32s. So basically, more than a week after short interest on the video game retailer exceeded the number of shares outstanding. At last check, remember this data, short position data is not fully updated every single day, just so you know. Even though I think the Nasdaq site, the actual Nasdaq site has more updated data. So 121 million shares had traded hands in the day session versus a daily average volume of 6.5. 125 million shares, and I don't know what time this article is. And actually, I'll tell you what how much traded. I'm looking at my other screen. The volume was 144.5 million shares. GameStop has 69.8 million shares outstanding. Short interest on the stock rose to 71.2 million on December 31st. That was 13 days ago. Okay, from a previous 68.1 million. So who the hell is shorting a stock like this, which is, by the way, at this point in year to date, take a guess how much the stock alone is up. Take a guess, Chris. Just the stock alone, how much it's up as of today's price, year to date, 2020.
It's up like $8, isn't it?
I'm sorry, I asked you percentage.
I was in POW yesterday and today. I wasn't in GameStop.
No, that's not what I'm asking you. I'm asking you take a
I
guess.
don't know what it was. I'm just telling you, I don't know what it is.
Okay, 1,000%. And we're still scratching around our heads Well, some of you guys are wondering where the next big play is. Exactly. Okay, from its lows. So that's pretty wild stuff. So Mondays, the shares finished up 10%. That was Monday, this Monday, when we were in there. Okay, and I've been repeating this, and I'll repeat it again. Repeating it repeatedly for months now. Well, not 2 or 3 months since this development happened. Actually for many months, that 3 major billionaire investors, including the latest addition, activist investor who got a seat on the board and got 3 of his lieutenants to join, is Cohen. What's his first name? I forget his first name. He's the gentleman who is the co-founder of Chewy.com. You have heard me say that repeatedly. See, I'm not in the business of convincing people to do what they need to do. I'm just telling you. You've heard me say this. It's on my recorded webinars. All of you have, and all of who listen to this recording, that when 3 billionaire activists and one of them is pushing his lieutenants on the board, there's some big stuff's going to happen. All you got to do is you got to sit with this stock or buy calls month out, maybe 3 months out, because it's going to happen. What do you do? They're just going to walk away? No, they're vested in it. Once you put your own lieutenants, your own people, your own trusted guys on the board, 3 of the board seats with by what's his name? John Cohen? I forget his name. He's a co-founder of Chewy.com, so one of the successful companies on the exchanges. That's the pet food company. So bottom line is that they are in the business of mergers and acquisitions. On top of that, they inked a deal with Microsoft as a partner for digital distribution and such. So a lot of things were happening, but majority of traders, not just our group, mostly other places, just chose to ignore it. Well, ignore it at your peril, because then you miss days like today, or many days which are fraction of today's moves. GameStop was up 30, 20%, 25%, quite a few times in the past couple of months. So just what I'm saying is, take these lessons, incorporate them, do what you all need to do. So basically, the company is called RC Ventures. Richard Cohen, I think that's his name. That's his name, not the hedge fund manager, but the Stevie Cohen, an activist investor, RC Ventures, added 3 of its members to the board. Also on Monday, the company in the holiday sales that jumped 4.8%. Digital sales had jumped 309%. So I'm just trying to focus on this particular company, because this is what I've been talking about for months and months now. They're going to shut down a lot of their stores. Mark my words, they've already started doing that, because they own a lot of bricks and mortars. GameStop, every corner you go to any strip mall, shopping mall, there's a GameStop. But that's the old legacy. They're going to move digital, because my kid grew up with GameStop. They are a well-known name. Anyway, noting that shorts definitely were part of the buying binge. This is very interesting. Okay, this applies to many other stocks too. Ihor Dushanowski, I can't say the name, the head of predictive analytics. Okay, I like these quants. They are not like analysis paralysis. These guys are, real robots. The head of predictive analytics at financial technology analytics firm S3 Partners, which is a big name actually, which specializes in analyzing data on short selling, said he doesn't agree that GameStop price surge was the result of a squeeze. So he doesn't agree that this just happened because of a short squeeze. And this is the part that really caught my eye. Okay? GameStop's GME's board shakeup and stronger holiday sales is causing a long buying tsunami. That's exactly what I'm talking about. A long buying tsunami, i.e. new buyers, which is the primary factor for the price move. Dushanowski said in the email comments, while I agree that we're seeing some short squeezed out of their positions due to massive mark-to-market losses today. I don't even want to know how many billions those shorts lost. those hedge funds who were short this stock. It's the worst nightmare. I'm sure some of the smaller hedge funds that had too big a short position in this stock, they blew up. Because when they're short, they borrow stocks, right? On margin, leveraged. It's a nightmare. This is much like the chicken and egg question. Did long buying lead to short covering squeeze, or short covering squeeze lead to long buying? He believes it's the former. We will not be seeing a massive drop. This is him talking, okay, not me. We will not be seeing a massive drop in shares shorted over the next few days. More like a 10 to 20% drop, which would mean 7 to 14 million of shares covered. So that means another 7 to 14 millions can be covered in the next couple of days, which is nowhere near the 70 million shares traded this morning. Long buyers are the primary force driving GME stock up. And I'm sorry, I correct myself. The stock skyrocketed 500% in the past 12 months, and actually more than that if you look at it from the bottom up, compared with the 16% gain in the S&P 500. This is heavy-duty stuff, guys, all right? So, because when I do my webinars and stuff, I don't sit and most of the times, I don't sit there and show every single options chart, but this has to be seen. Has to be seen. So let me just bring it up. It's much easier to do it very quickly on my iPhone, obviously, on the app. Bear with me one second. All right, let's see here. Today was the 15th. And the reason I bought the 30 calls because they were so cheap, I believe it was about 2 weeks ago or something like that. You guys know that. Was because if there was a buyout, then it would be a home run, and this happened without a buyout, or else there were lottos. No big deal. Lottos are lottos. And have a little patience. I'm bringing it up. One. Charts. That's a little tricky moving multiple screens around. Okay, let's see here. Let me drag it. Okay. This was this week. Yes, this was this week. Since Monday. This is an options chart, ladies and gentlemen. This is not a stock chart. Just in case somebody is thinking. So the options were basically between 1 cent, if you kind of zoom in, yeah, 1 cent. Let's say between 1 or 2 cents to 10 cents. Yesterday, when I told people to buy the February calls, and I also did mention that you can buy some January 15th calls because they're so dirt cheap. I mean, it's not dirt cheap. They were like nothing, 2 cents, 3 cents, 4 cents. Sometime in this area here, they were literally between 1 and 4 cents right there. So let's do this. Okay. They went to almost $11. So if you take I take my $1 calculator from Dollar General, yes, sir, and divide it by 0.02, that's 50. Now, I can assure you that none of us got 54,000, in which case it would just be too much. I wish. I certainly sold it at a very good percentage, which I posted on the Twitter feed. Then I got in again a little bit and then sold it again, obviously a little bit early, not, how the hell am I supposed to know that it goes up to $11? But the February 22s, I'm sorry, the February 19, 22 calls were also doing extremely well, not to this degree. So just rounding off the number. Okay, so wake up and smell the coffee. And somebody says, well, when can I get the next one? Well, you gotta be in the game. You gotta be in it to win it. We don't know when the next one's gonna do this. So basically what that means was if somebody had, and I'm gonna get off GameStop in a second. If somebody had, these numbers are so big, $100, okay, they would basically make, yes, you're right, $54,000 today. Exactly. History making, monumental. So forget about the $100 to $54,000. How about catching a slice in the middle? And I've shown quite a few things at certain occasions which do this. So my suggestion, because I don't advise, I suggest to all my members is when we are suggesting some small cap stocks or any other stock for that matter, repeatedly, month over month over month, and sticking with it, something's going to happen. No guarantees, but the chances are, goddamn, something's going to happen. Because that has been our track record here at Clueless 8 Trading. Because whatever it is, one thing I'm not is stupid. Am I silly at times? Am I impatient at times? Do I miss certain trades because I can't catch everything, just like all of you? Yes. Stupid is not something I'm in my vocabulary. I mean, mentally, hopefully not. Am I severely emotional? No. I'm probably on a scale of emotions, the EQ, emotional quotient, very low, like a robot. So try to practice these things, and it'll work for all of you. Most of you are emotional freaks. Something goes down, oh my God, it's all over. That's why the technical discipline of focusing on charts, and that's the next thing we're going to look at now that we have gotten this out of the way, okay, of having the discipline of using different styles, whether it's a long-term swing trade, whether it's a short-term high beta momentum trade, whether it's an intraday scalp. Most human traders have no discipline, none, especially ones which require patience. And I have mentioned quite a few of them that are about to do a fraction of what this monster did today. Okay? And if I ask which ones, some of you will be able to answer. Well, it's not a quiz, but I'm just saying. Some of you will basically say, no, well, I can't really remember. Well, good luck, because those are going to be the next ones. Have to say it, have to say it. So let's do this. Let's clean this out. So where are we with this stock here? From somebody says, well, I'm not in it. Okay, fine. Let's see what can happen. Let's look at a monthly chart. And this is phenomenal. We were never at the stock at $2.57. We bought the stock between $5 and $7. And that was around the September-October period of, August to October period of, and this is a monthly chart. So each candle is a month. Started looking at GameStop because I read a phenomenal article about the gentleman who was the big short. If you remember, that was what happened. That's what happened. I know many of you remember. I know Paul will remember. I don't think Chris was with us at that time. that the gentleman who, what's his name again? I forget. The gentleman who was the, I'm sorry, but your mic gave a little sharp beep.
Oh, yeah, Michael Burry.
Michael Berry. Michael Berry had taken a position and believed that this company could be the next monster. I can't even imagine how much money he made. And he's still in it. Michael Berry is the one who piqued my interest. And I said, wow, here's a guy who's looking at real undervalued situations that can be unlocked to its maximum potential, way ahead of the game. And I said, wow, gotta start looking at this. Sometimes it was moving a lot faster. Sometimes it was just kind of moving sideways. But look at the monthly chart here. The monthly chart of this, the stock was $57, $58 in November of 2013. That's 8 years ago. Less than 8 years ago, obviously. Let's say 7 years ago. Okay, 7 years and a couple of months. And as the digital transformation started happening with online gaming, everything started going digital, these guys didn't keep up with it. Bad management. Went to 2 in April during the COVID crisis. $2.57. Since then, no, this is April of 2000, yeah, April of 2020. So every single month, and this from a technical analysis standpoint, this is textbook. This is a Harvard Business School technical studies. If they teach technical analysis at Harvard Business School, I don't think so. Believe it or not. Okay, every single month is almost a bullish expansion candle. And this month, the largest of the bullish candle. This chart was constructed a while ago. A Fibonacci retracement for the last, all the way from, if you want to look at it this way, all the way from 2011, right? Almost 9-10 years. And here's your Fib 50, our favorite, right there, $30.29. Guess what? It blew past that, hit the 61.8 Fibonacci level, which is 36.8, which also happens to be this uptrend line. And if somebody says technical analysis doesn't work, well, it works a heck of a lot better than emotional chit chat on trading forums. I'll tell you that. Okay, here was the trend line, and guess what it did? It exactly hit the trend line, give or take $2. So is the stock very exhausted right now? Maybe. Yeah, of course. I mean, can it move up $3-4 over the next day, like when it opens up tomorrow, maybe $2 or $3? Sure. That's why I said, you can buy I suggested that it was like $2 and change the calls. I suggested buying the February 19th. It was the last trade I think I put out there today. Yeah, re-entry, January 22nd, 39 calls, because the heat is so much right now that whatever happens is happening within days. So I stuck to the January 29th one. Once the stock retraces to a very large degree, if it does, then I'll look to buy the long dated calls going into February and March. But this is a lot of money in. Look at the volume expansion. Not even funny. This is this is when the buying really started. August, just a few months ago. Right there. All green, all green, all green, all green. And here's the best part. And these things apply to all stocks, by the way. Small cap, mostly small cap. You never heard a single peep on GameStop on CNBC today. Did you, Chris? During the day.
No, they never talk about it.
Correct. There's many of our stocks which have gone monsters. They don't talk about it. And by the time they talk about it, it's still going to go higher. Exactly. And there was just one mention on GameStop on that halftime show with the guys, what's it called, Fast Money. And they couldn't even explain why the stock really went up. Except Melissa Lee did mention that, yeah, there was a short squeeze of monumental proportions because the number of shares shorted was bigger than the outstanding shares out there. So basically, at this point, if there are further developments, positive developments on the news front on the company, which they're certainly coming, with RC Ventures, Richard Cohen, Chewy.com co-founder in the game. He's not sitting there picking his nose. Okay? Very successful guy, very smart guy, understands the online business, marketing business like nobody's business. Okay? Then you are looking at the stock. Because at this point, it's on every single technical screen. From Investors Business Daily to every single other, if you do any scan, number one. So all of a sudden, a lot of people have no idea about GameStop stock other than knowing the name. If you're an American, you know GameStop, is suddenly looking at it and saying, hey, let's put this on our radar. That's what traders do and investors do. So all of a sudden, now it's almost a household name. But it just happened today, so it'll be at least another week to 10 days before it really filters in and it becomes little chatter, okay, at the local bar.
Frank, I got a question.
Let me finish. So bottom line is, let me finish, I'll take a question. So bottom line is, if you look at it from a pure pattern symmetry standpoint, technical standpoint, a couple of positive news announcements, let's say the stock pulls back a little bit. I'd like the stock to pull back a little bit, of course. Of course. Let's say it pulls back to $25. Big deal. Big deal. Okay? And then I'm just going by the Fibonacci stuff. The shorter term charts are much easier to pinpoint. Oh, here's another thing here. This is no signs. Look at the two lines here, the percentage K and the percentage D on the MACD. They are not even overbought. And the what do you call histogram bars are just systematically expanding. And I've shown this before, by the way. And I've shown this on, and I've also shown it recently on a couple of other stocks. Look at the stochastics. Not even in the percentage K, percentage D lines are not even heavily into the overbought territory. Now this is on a swing basis, mind you. Short term, of course, they're overbought. So very simply, all of you can spot it. I don't need to even show it. 40 is a round number. We almost got there today. $50. If they get bought out, the stock's going to get bought out somewhere around 60. And something's going on. What's your question? What's your question?
I was looking at, I'm thinking about Corsair Gaming as like a sympathy.
Okay, no. Corsair Gaming has nothing to do with GameStop. We will look at stocks. I know Corsair Gaming well. Corsair makes the chips which are inside my computers. Very powerful, very powerful. That has nothing to do with see, GameStop's move is not because of all of a sudden online gaming going higher. GameStop move, this is what you all have to understand, is because of restructuring, mergers and acquisitions, the unlocking the value, the intrinsic value within a company, which is why these guys, these venture capital guys, smart cookies, become so filthy rich. Okay? So this is really nothing to do with that. Because the stock is not competing with Activision, with some other gaming company. They're the makers of the games. These guys are selling. They're selling the hardware as well as the games. This is a pure mergers and acquisitions play. This has nothing to do with stuff. Anyway, I'm going to cover a bunch of stock. We're going to look at the market. We're going to cover a bunch of stocks, taking one or two of your questions. We're going to wrap this up. All right? And you guys can do whatever you want after that. All right. So this is what the stock looks like on a 1 hour basis. So net at this point, I'm looking at $30 as the floor. Okay. This is a beautiful bull flag, cup and handle since yesterday. Okay. So basically, these are the numbers that I'm looking at from an entry standpoint. Of course, I'll be watching it on a 15-minute, 1 hour basis during the day. So you have, if you want to look at it this way, it's a bull flag that in the afternoon broke out again. You can look at it as a, I can't say you can look at it as cup and handle because the other side of the cup is not there. You could, I'm looking at these numbers here around 30, 30, $28. These are points of my opinion, points of attractive entry. And of course, I'll be putting up my alerts. Next, let's look at the markets. All right, that's enough of GameStop. Hopefully you guys all learned something. All right, market. What's the market doing? Somebody's asked me. Let's say somebody asked me, hey, what do you think the market's doing? The market's going frigging higher. The market is going frigging higher. I've been showing it. I've been tracking it. And unless the biggest risk to the market right now is major political risk, not the impeachment stuff and all the political shenanigans. I'm talking about actual violence, again, within the next couple of days going into the 20th. Because if we have a peaceful transition, which I believe we'll do, and not any crazy, wild, hardcore, violent protests and stuff, you just watch what happens on the 20th. Like, Paul's bullish. Exactly. The Nasdaq will go nuts. I said nuts, higher. We'll end January on a very strong note. So we do have a couple of days of, minor uncertainty and stuff. But aside from that, look at this chart. This is a 1 hour chart that I show you guys all the time. This is a chart that I've been showing you guys forever, updating it along the way. Told you even guys today. Market will probably hit it. Futures are up like 10 points right now, handles. This is your previous high, 38.24. It's going to kiss that probably by tomorrow morning. What's so difficult to understand about this chart? We're trading in a range. Here was the first support. Here was the second support. We never got to the second support, despite overnight lows on S&P futures, blah, blah, blah. All the doom and gloom talk. We never got there. Can we get there? Sure. This is critical support, 37.46. But otherwise, it's staying within the upper range, and it's going to go to the top of the range. And at that point, there'll be some selling, or maybe not. Or maybe not. There's a lot of stocks which are so far away from their highs. We know that. Like Boeing, like Amazon, which we're going to cover tonight, which just broke above the 50-day moving average again. Like Netflix, giving you big cap name stocks. And not to mention the great amount of EV companies that some of them we have been trading. Like NEO, like Nikola, like that LiDAR company, laser identification detection company, Laser, LAZR. But the big ones which drive the market higher, there's a whole bunch of them, even Nvidia. So I don't know what world some people live in, but anyway, higher. So that's your simple answer. Let's look at the daily. That's our trading chart, the 1 hour chart. This is your Nasdaq, QQQ, not real time, of course, not real time because it's not the Nasdaq futures, the Qs. Looks fine, and that's despite the fact that the big cap stocks really did nothing. Amazon was the best. Apple was the best performing, up 1.92% today. Netflix was up 2.78%. That's the best performing one. Tesla was red. It's nothing like major, but it still looks damn good. Told you guys when it was doing a triple bottom, it broke out, came down, retested. Look at this tail. Retested this previous major breakout level right there, and then said, boom, up. And that happened on the 12th, yesterday, at 12 noon, right there. Look at that tail. That's all short covering, buying, not GameStop type of short covering. I mean, trying to be funny here. Okay, but and then went up. There's nothing wrong in this picture. Let's take a look at. Let's pull out the longer term. My preset charts. Let's look at the weekly. E-mini weeklies. The broader market. Still going higher. The Bollinger is being stretched. Yes. Are we overbought? We sure are. But nothing is saying that there is immediate collapse other than any other black swan event. Like I said, the next couple of days are very critical. This is moving beautifully sideways above the 80 RSI. The stochastics shows underlying strength. Bollingers are getting stretched higher. Upper end of the Bollinger is 3,900. So basically somewhere between 3,900 and 4,000 is where the market will peak on a short term, and we'll get a nice correction. And I think that happens maybe, I don't know, maybe the first week of February, or maybe, sometime for a couple of days this month. No, not a 10% correction in January. I don't think so, barring any unforeseen heavy duty political event. Or some major companies. Remember, we're getting into earnings right now. Some major companies coming up with drastic guidance. That'll do it. But aside from that, it wants to go higher. All right. VIX. I put out my VIX chart end of the day. Hopefully you guys take a look at it so you know where you stand. Look at the VIX on the daily. See, my job is to try to decipher these technical tea leaves and figure out whether or not what's happening. Your job is just to try to understand some of the messaging that's coming out of these charts. That's basically, what I'm trying to do. So here's your lower Bollinger around 20. Every single time the VIX goes close to 2021, it bounces. Well, another 2 points down on the VIX means that another couple hundred points up on the broader indices, on the Dow Jones Industrial Average. This is definitively still coming down. Internals are all going down. And I put that beautiful chart directly on my Twitter feed with the red arrows and stuff. So like I said, traders, 99% of traders have ADHD. Impatient, they don't want to focus, but they all want to make millions of dollars. Well, it doesn't work like that. It's true. So I put out these arrows and everything just to get your eyeballs attracted to those particular inflection points so you understand, like, okay, he's showing a red arrow down, so it's going down. You think I'm being funny? No, I'm being serious. My charts are pretty easy to read if you just focus a little bit harder. Okay, so this is still looking like the lower Bollinger, 20 to 21. That translates into, like I said on my Twitter feed, suggests market reflex rally intact. And don't forget, 15th, this is the monthly options expiration. Hallelujah. Okay? And that's why some of these stocks are going nuts. All right, that's your VIX. Now, intraday VIX will be choppier. Obviously, that's standard procedure. Markets will open up, markets will pull back around 10:30, 11. Big frigging deal. There's your 1 hour chart. What is this telling us? It's oversold, so markets can open up, pull back for an hour or so between 10:30, 11:30. By the end of the day, higher. It's literally happening every single day because the general broader daily, and now we're talking about the volatility index, is still trending down. But when you look at the 1 hour chart, you can see that it's getting oversold. That's why I construct all this, just so you guys can benefit from it. So I'll put a marker here. I even put markers to get your attention. I actually don't need to get your attention. You guys need to get your own attention. Look at that. There's a gap fill, 2172. These are oversold. So on a short term, they can get overbought. That means we could have an intraday pullback, and then buying comes in the latter part of the day. When we were shooting up, and I showed you, we hit the gap exactly right there, right there. I mean, I can't even tell you how accurate this chart is. I'm not just like, patting myself on the back. I'm just trying to impress upon you all that these charts that are delivered to you are very, very robotically precise. I just can't mention, I just can't like talk a big talk without showing you exactly. Here's your downtrend line. And here was the gap fill. That's why it's a dotted white line. And guess what it did? It hit that. And after that, I drew the downtrend line. And pull back yesterday. And here's your downtrend line. So unless we breach this downtrend line to a substantial degree, in which case we're going to go to 26.79 or 27, which means quite a few 100-point drop on the overall market, and a lot of stocks will be just pressured down. Unless that happens, you can still trade the intraday volatility. What's so difficult to understand about this? This is the ultimate crystal ball. If you know how to read it. Now I do see a pattern which tells me it's like a W. So I wouldn't be surprised if at some point, tomorrow's Thursday, right? Or Friday, we jump up towards the 2350 level. Maybe Friday, remember, Friday afternoon, Friday morning generally is solid. And then by Friday afternoon, as options premium and everything, dissipate for the weekly option, I'm sorry, monthly options, then you see some downward pressure. So maybe by Friday afternoon, the VIX hits 2350. And mark my words, I've been dead right on this. This is real predictive analytics. So by Friday afternoon, we'll see. Okay, next. Oh, while I'm at the screen, let me just show you one other thing. Let's look at the, no, it's not on my VIX thing. This is a unstructured chart. I haven't structured it yet. It's on my other screen. And I'm going to show you monthly. This is, oh, it was structured, but I didn't fix the lines and stuff. Look at this monthly chart. Take all this off. If I drew no lines, nothing, the upper end of the automated support resistance level is 3923. So somewhere between low 3900s to 4000. I don't think we get to exact 4000 is when the markets are going to stall. This is your monthly chart according to bar charts on Quad. That's automatic line here. I don't draw this. All right, 3923. Use that as a benchmark for the upside target. Okay. Let me pull this out. Now we look at a bunch of stocks. And again, there's enough stocks. No one has to look around. I even put stocks on the radar on Friday. You guys should write those down, track them. Because remember, a lot of stocks don't fall into the technical radar unless they do something big, like a big fall or a big move higher. Both cases, they fall in the technical radar. All right, where's my... This is your SPX on Thinkorswim. The market wants to go higher. I don't want to keep on explaining the same thing over and over again. All right. Stock that I think is so cheap to buy, and I've mentioned it many times. And I personally, this is just my personal opinion, I'm going to be dead right. While some of you will be like, oh, I should have, could have, same stuff. I don't care. This is Big C, Big Commerce. If you look at the longer term view, which the stock just came public in August, so it's not like that's much of a long term. This is where it's coming out of. Remove this drawing, remove drawing, remove drawing. See, my favorite swing trades are the ones overall. I'm not saying I have just one thing, that's it, I'm not rigid. You have to be flexible in this game. You have to bend the rules. But my favorites are the ones which are coming off the bottom. Great companies, which are not talked about, but they're coming off the bottom. And most traders, including many of ours, don't like them. That's when I get excited. I mean that. No insult to anybody. When you guys sometimes don't like a particular stock, and I'm kind of, sticking with that swing trade, I like it more. I do. Because as humans, what do we normally like? Things that are going higher and making us money. Well, I like to catch some of these beasts before they are. This one did make us money, so it's not like it didn't. And then it lost us some money as it kind of slid back. Because I get a lot of DMs like, man, this one, I get a lot of DMs, some DMs. Like, man, Big C's killing me. I said, what is this? You're holding that worse in big commerce? And then 2-3 days later, when the stock's up 5, they're like, yeah, let's go. Most human traders are just like that. They're manic depressive.
Hey, Frank, did you see my post that I made yesterday about this?
Yes, I did, sir. I did.
Yeah. Yeah, I think it's a great
and go ahead and repeat it. What did you say? Because I did
think
read
it's a
it.
great alternative play. I liked it. I bought at yesterday's low.
Good.
I bought a
Good.
call. I sold it too early today though. But
Okay, so
I
basically,
like it as an alternative.
one second. You like this stock? It's just coming off the bottom, but you're selling it the
is.
next. But you're just selling it the next day. So do you still
Well,
have it?
I was busy on POW. I was messing around with the other stock, and I can't
Okay,
keep
so
track of five
if
things.
you wake up tomorrow morning and and I'm not kidding, and if this company is on the radar of a lot of big tech companies in Silicon Valley, okay, and they get a buyout bid, you're going to be like, so I don't understand that mentality. This stock is
Well,
coming up. And listen, I'm not here to debate with you. I'm just simply saying you
well,
can
you
do
are.
whatever you want. Okay, I'm not. All I'm saying is you love the stock. I mean, you love the stock from a
I
technical
didn't say I
standpoint.
loved it. I never mind. Just forget it.
Okay, don't get emotional with me, Chris. You know me well, and I don't like you when you get emotional.
Busted my balls. I sold
Sure.
early.
Okay, let me just put it this way, with all due respect. Of course I'm going to bust your balls because I am the boss at Clueless A Trading. I can bust anybody's balls because this is my business. I'm the one in charge. I'm not busting your balls. I'm simply trying to say, not highlighting you, but I'm simply trying to say, when a stock like this, and I was trying to explain this, is coming off a significant technical bottom, it's best to have some position in it at all times. Of course, scalping it when it's up, it was just on the 4th of January, it was $58, and now it's 67. So, okay, it's up $9. So, okay, take some profits. What I'm simply saying, and this is not directed to you, Chris, so chill out, okay, is the fact that in these type of companies, you never know what's going to happen overnight. I'm not just talking about buyouts and stuff. There could be major news announcements. When this stock ramped up like this, the news announcement came actually weirdly in the middle of the day that they're going to power Facebook's Instagram shops, which is a huge, huge multi-billion-dollar business. And the stock went berserk, like literally went berserk. It went up $40. So what I'm saying is these kind of things can happen in these type of companies. It's always good to have a little bit in it. That's all. That's all. Whether it's one call, whether it's 10 shares, I don't care. Whether it's 100 shares, like whatever the case may be. So let me just get into the stock here. So you understand what what I just said? Yeah, that's what I meant. That it's got nothing to do with you. All I'm saying is when a stock, from a technical standpoint, when a stock is coming off these type of levels here, then it is best to have some position in it. Oh, that's a better term. That's a major gap fill. And I can assure you, somewhere or the other, in my opinion, after the next earnings and stuff, the stock will get there. Because and just like GameStop, there's not that many shares out there. And God knows who the hell's shorting it. All right? And I hope there are big shorts in it. And I want them to die. Like technically not die, like technically short squeeze.
What I wanted to tell you about this.
Go ahead. Go ahead.
They're based in Texas, not Silicon Valley, and they
have. I didn't say Silicon Valley. I said Silicon Valley companies are very interested in this type of company. That's what I meant. Yeah, go ahead.
But you can download an app. They have a federal firearms license app. So they're based in Texas. I would assume they're Second Amendment friendly. They will probably be pick up a lot of business from Shopify, because of Shopify banning Trump and, the exodus from
Well,
some of their online
well,
stores.
they actually work with Shopify also. You see, let's not mix politics with stuff. Just let's keep it aside. Okay, Shopify is not going to lose shit business. All right, and as Paul says, Facebook is neither going to lose any business either, and neither with Apple, and neither with about 17 or 18 U.S. large corporations that have decided not to do business with certain Republican donors. I mean, the thing, and have a thing. None of them will. Let's not mix politics with business. The group, let's put it this way: the people who spend money on these companies are not the regular masses. So let's not mix politics. I agree with a lot of the stuff that you're saying. Some of them I'll disagree with. That's America. But what I'm saying is that will never make you money. So it's not like Shopify business is going to be taken out or garbage. Shopify's earnings are going to be so big it's not even funny. And the stock is already hovering like 1,200, 1,250. But what I'm looking at from a BIGC standpoint, from a technical basis, here's your 50-day moving average, $71. What this stock really needs to do, $72, let's say, is to break out hard and hit the upper end of the range, which it did back in middle of December, right there. Okay, the range, and that range is 86. Lower end of the range is 60, 57. So it's $30. Keep this very simple for everybody. $30. All the internals are fine. And this is actually very good. I'm going to expand that and show it to you. The first green histogram. That's $30. Okay, so 30 plus 86, you're arriving in this range. And that is the previous peak. So there's a lot of money to be made. Calls are not the calls are not that expensive at all. The stock was up $5 today. We have the 75 calls, strike price 75. The ones for this week were with the lottos, they were up 86% at the close. At one point, they were up 90%. Like I'm lottos, I'm talking 10, 15 cents up to 30 cents. You can still make money on those. But the ones we're focused on are the February 19th. And those were up close to 55% to approximately $4.80. So they're not that expensive. So I like it. So whichever the case, this is, and I've shown multiple charts on this on different time frames. I like it a lot. Next, let's take a look at one which worked out and still going higher, which is SDGR. Another company nobody talks about, and I'm happy when nobody talks about it. Schrodinger, biotech artificial intelligence. It's their software that expedites the development of these novel drugs, whether it's COVID drugs or any other, and shortens the time span for research and such. I mean, they're out of the world companies. Okay. I've been showing this. I'll show it again. What a beautiful chart. Told you that the stock would go here. I've got to adjust a little bit. This line, 89.23. Well, it went there and it busted a move above that 91. And it's pulling back a little bit, but there is absolutely, remember, these are not one-trick ponies. They're not trying to develop drugs. They develop the software, artificial intelligence software. So drug discovery and development and innovation of new drugs in the United States is obviously at the forefront of it. On the biotech industry, they facilitate it. They shorten the time frame. This stock is going to $100. I'm not quibbling here about $3, $4. I'm just showing you the overall pattern. It's going to go back to $100. All you have to do is buy it, sit with it. And if it goes up a lot one day, sell it. And buy some higher strikes. This is not rocket science, guys. Now, it's a slow-moving option. They don't go up like 900%, but they'll go up 70%, 110%. Another great company that no one talks about. And I can bet your ass, excuse me, my French or my Chinese, okay, that they're going to start talking about it as like no one's business once it blows past 100 and it has one of those big fat, which has had before, candles like this. And believe me, it can. And all of a sudden, it's in everyone's lips. Okay. Now let's look. Obviously, there are tons of stocks out there. One other one that I want to show, then I look at the ones you guys want to see. You guys all know, I'm biased towards NEO, based on the fact that they raised about $1.5 billion, and the stock was still up. You know what that means? That basically means that everybody, all the big money, wanted to buy the offering, regardless of the fact that the offering was done at a price $4 lower than what the stock is right now. Exactly. And the stock's still up. Normally, when a company does an offering, let's say 5 million shares, 10 million shares, 50 million shares, whatever the case may be, depending on the size of the company, stock goes down. Then they do the offering, then it closes, and then the stock goes higher. But companies like NEO, companies like Tesla, every time they do offering, stock comes down a little bit. In the case of NEO, it didn't. In the case of Tesla, it goes down, and boom, within 3 days, once they suck up and settle the offering proceeds. Didn't Tesla just raise $5 billion, Paul?
Yeah, couple weeks ago, maybe.
Yeah, like a week or two ago, not too long ago, and the stock went up right after that, after the offering, So that's what.
By the way, Frank, Michael Burry is short on Tesla.
Oh, he's short on Tesla? That's interesting.
Yeah, this week he said he's sticking to it.
Wow. Well, I guess you never know, Michael Burry is Michael Burry. He's an activist investor. Short on Tesla, to me, is a very dangerous game. Like a long-term short. Short-term short, sure. But long-term shorts, a different story. All right, let me just show NEO, and then please, if you want me to look at certain things, I'm going to do a longer-term chart here. This is another beast. I put this chart out there today. First level of contact, 67. Well, it almost got there. Went to 66, 69, 99. Missed it by 20 cents. Okay. Stock 70. This is a very good looking chart. So if we slice it up from here and look to see where it can go, $92 on a Fibonacci extension. And it won't take that long. I'm not talking days, a couple of weeks, month or two. They're doing extremely well. Now, there could be all kinds of bad news and stuff coming here and there. There could be a short selling report from Citron or somebody else saying, NEO, it's a complete scam. They don't have cars. They have horse carriages, which run on batteries. Not on horses either. All the kind of garbage can happen. Those are black swan risk we have to deal with as traders. But this is a good looking chart. I think the stock's going higher. And the calls are pretty damn good. The other hydrogen, I've been doing a lot of homework on the hydrogen side, hydrogen fuel side. Obviously, one of the biggest beneficiaries of that is Nikola. Here is another chart which I showed to you guys, and I did quite well on this. This was the falling wedge pattern. Right there, daily. Let's do this. This is a stock. Told you guys to buy it around 16 bucks. I should told you guys to buy it when the stock was just coming off the bottom. Okay, somewhere in this range. Stock is right now 21. Just hit, and I'm going to zoom in now. Used to be a $93, $4 stock during the hype. Then they ran into problems, and it hit the downtrend line and pulled back a little bit. That's also a gap. I think the stock could, I shouldn't use the word very easily, but yeah, easily get to $30, or at least the upper end of the block. Now, one other thing that I want to mention to, not necessarily you guys, but a lot of new traders. I don't understand why people, sometimes some new traders and stuff, they don't like trading some of these diverse names, real companies, of course. It's not bullshit companies, they're real companies, which are the forefront of clean energy. And once January 20th rolls over and Biden gets fully officially elected as sits the Oval Office, clean energy is gone. You think these are highs? They're going to go up higher. Paul knows that. We talked about it months ago. So keeping politics aside, okay, it's big money to be made. And the stocks like this will probably go up back to where it was, 40 bucks. This business of trading is business of money. So that we can take care of our families, our loved ones, give to our favorite charities, help the people who need most help, and hopefully spend a little bit of money on yourself. That's what our business is. Our business is not sitting here combing through our political ideologies. Now, Biden better keep his, he's going to have his toes on fire. He won't be able to take any drastic movements on taxes and stuff, in my opinion. Okay, so fuck ideology, guys. This is business of trading. Wall Street, corporate America, for now, are backing him. And that's A-okay with me. Because we're not into ideology here when it comes to trading. That's our personal business. Exactly.
Hey, Frank, can I mention a great example on that point?
Sure.
Like this is, to me, this comes to mind as a perfect example for, why you shouldn't involve politics with stock investing, and it goes both ways. Because when
Correct.
Trump got elected, there were so many Democrats that said, "I'm getting out of the market. This is terrible." And then we had the Trump rally, right?
Absolutely.
And now you look at since November, what has the market done since November when Biden got elected? So then it was the opposite, right? All the Republicans saying, "I'm getting out." So there's a great example of both ways.
Absolutely. And this is coming from Paul, who's certainly not a left-wing liberal freak. Okay, exactly. And another example I'll give you. When you look at longer-term history, when Bush left and Obama took over, they said that's it. It's end of the world. And back in what was the elections? 2010, 2008. Okay, they said that's it. It's all over. I was there on Wall Street, and like some of my clients, too much ideology. Like, oh my God, he's going to completely screw the American economy and stuff. What did the markets do? Hello, what did the markets do? I mean, you keep ideology aside, and you tend to do quite well. And this only goes back to 12. I don't even have it that long. I need to. 10-year. I only have a 10-year thing here. So anyway, this is September 2011. Okay. What has the markets done? And this is what hurts markets when you have a COVID type of situation. That's when you get those breaks. And this is, you look at this chart here, aside from all the lines and stuff that are drawn, it's just ripping. So yeah, let's keep ideology aside, and Paul is dead right. All right, whether it's Obama getting elected and again getting elected, Trump getting elected, okay, that's it, it's the end of the world. It was one of the fastest acceleration rallies. Now Biden's gonna get elected, oh, it's the end of the world. It's going to be the fastest move on the, maybe not necessarily the overall market, but on particular sectors, clean energy, innovative technologies, that type of stuff, and companies which have been somewhat, somewhat hurt a little bit, or their growths are kind of questioned, like Nvidia, like people who do a lot of business in China. Who does a lot of business in China? You and me? No. The guy from Alabama, the guy from New Jersey, the guy from Boston? No. U.S. corporations. What makes America powerful, whether you like it or not? U.S. business is what makes America what it is. That's it. It always has been, it always will be. Exactly. So if we have a little bit of normalization with that side, boom. We won't be able to catch these things. Trust me. Now, I wanted to show Amazon from a trading perspective as well as a longer term perspective. From a trading perspective, let's see here. Amazon is repeatedly attempting to break out over this red line here, which is the 50-day moving average, which has acted as somewhat of a pain in the butt resistance for a long time. For quite a few, days, it goes up, it shoots up, and then comes below that. Today, it closed pretty much exactly at the 50-day moving average. The good fun thing about this stock is you can trade it on a short-term overnight basis, or you can buy it longer term and say Amazon has a pretty damn good shot of getting up to the first upper range, which is 32.50. So you can buy these calls 50, 60, 70, $80 out, and those options still move from a trading perspective. Okay, I'll give you an example. I almost bought the January 15, this Friday, yesterday. I was going to buy, yesterday, the day before, I was going to buy, they cost about $12 when I looked at it, $11. These are the 3180 calls. And this is when the stock yesterday was at 31.15. So they were $65 out of the money. I looked at one of my other 1 hour charts and I said, okay, 3180 looks like a level that I know that it wants to go to, and I'll show it to you on this. I'm not just making up these stories. Oh, where is it? Where is it? Tough to move things around the screens. I need to change my graphics cards. I need to get the new Nvidia ones. I'm serious. So this is the daily chart, but it kind of gives me an idea. So Amazon did this yesterday. Here's your daily chart. Okay, I've shown this chart before. Show it to you again. Here's a big triangle. Watch this. Here's your triangle right there. This line, this line. That's from the 3,500 level. Okay. Stock repeatedly is trading within a range of around 32.20, and on the lower end, this major support of around 30.80, right there. So you can trade this for 40, 50 points. I was looking at these calls; they were around $11. I said, okay, let me try to just buy one. I didn't. All right. Those calls went to, at one point today, these were the January 15th 3180 calls based on my reading that the stock would, it was here yesterday, creating a nice green doji of the lower Bollinger. And I figured that it would hit one of these lines here, which comes to about 3180, 3175. I don't need it to go to 3180. I just needed it to go towards 3180. So $11. So Amazon at the height today was 3190, right there. Okay, and those calls went from $11 at one point, hit 31 just in one day, just in this candle. Okay, $11 to 31. I'm like, shit. So even if you caught the middle, let's say you caught it for 9 points, it's $900 in your pocket off one trade of a great company. So is it all over? It's just starting. Yeah, it's just starting. And I'll show you why. Please focus. There you go. That's your regular stows, what we call the fast stochastics. These candles moving very quickly. Okay? Upper end of the range is this line here. That's 3260. That's 100 points higher than where we are right now. Forget the upper Bollinger, forget hitting this uptrend line, in which case it's 3400. It's turning. Here is the most exciting thing that I noticed after all these little shenanigans. You can draw it as a falling wedge, all kinds of stuff. Let's try to keep this simple for everybody. Okay. And you guys obviously already saw it. It is just turning. And when this monster, the slow stochastic, turns, don't ask me, baby. You're done. Gone. This is what happens. Every single time the slow stores turn, especially off the bottom, these are significant bottoms. Significant bottoms. So you can day trade it, or you can just buy one a month out, 2 months out. I'd buy into February, Valentine's Day. Okay? And just sit there and let the calls take you to the promised land, which most of us and many of you always keep missing. Exactly. So 3 times I've noticed it's gone below the 25 RSI mark on the slow stows. Once was in September. Stock at that point was 2870. See you later. Yes, there was a couple of red days, but I'm just showing you what happened. Then it happened in November. See you later. the stock goes from 2,900 to 3,400, $500. The buy calls, like I said, 50, 60, 70, $80 out. Have some time on your hand. You get a big spike, a gap up open, like $130 type of open, which has happened on Amazon quite a few times. I believe is about to happen. Then sell it. Buy some strikes higher. That's what smart traders do. They don't sit with the original strike because it's already been breached. When I buy a call on GME at what do you call, originally we had the 20 strikes. Okay, then we had the 30 strikes. Now the stock is at 33. So why should I sit with the 30 strikes? Let me buy the 35 or the 40. It's simple stuff. So 3 times it's happened. 1, 2, where it's been below 25 RSI and the stows are just about to turn. Now they haven't crossed over. By the time they cross over, the stock is going to be up another $60. Just letting you know. Once this crosses over and starts doing this, starts doing that, stock is going to be at 3,300, almost hitting the previous supply limit of 3,400 or 3,368. Amazon.
Hey, Frank.
Go ahead.
Yeah, that's a fantastic illustration there, and it just looks getting more coiled and coiled all the time. So it's getting to the pinnacle of the triangle there. So it's got a good chance. If it retests that, it could very well break out. So I'm just wondering, from a longer term perspective, Frank, what kind of call dates would you look at if you were trying to get early in on a break of that triangle? If you wanted to try to cheat and get in early on
like
that.
I said, February, March. March is the end of the first quarter, right? End of the first quarter. Yep. So I would be looking at March calls. I wouldn't want to go any further out because there's going to be earnings stuff. If the stock runs up a lot before that, obviously you can take your money and like I said, buy higher strikes. But I would be looking for furthest out personally, March. But also keep in mind the premiums go up. Premiums go up pretty substantially as you go out month after month because it is expensive. You know what I'm saying? Because the market makers know it's expensive. What I'm basically so that's what I'd be looking at. Now
That's great. And, sorry, Frank. Could I just ask a question, and you can comment later on this? So a monster like breaking out. I mean, it's 1.5 trillion market cap right now. It's actually quite a bit below Apple. So that's another case for breaking out, just to catch up to Apple. Doesn't even have to catch up, just see catch up a little bit. But if a monster like this breaks out, what does that mean for the overall market?
Huge. It means the overall market. Let's put it this way: I don't care about the overall market, but for the Nasdaq, because Amazon is not reflecting in the overall market. Apple is. Is Amazon in the S&P 500? Yeah, I'm sure it is. It's got to be a company with that size. That's very positive for the overall market. It means things are strong, tech is strong. The immediate catalyst to these companies, I repeat again, the immediate catalyst to these companies, and I'm going to flick through a bunch of them. Let's say Apple. Apple's chart is much better looking. Okay, is China. Okay, China, because there will be a little bit of a sigh of relief. And Biden's not going to come in and say, "Oh, I love you all tariffs are removed." No, he's not going to do that. Okay, but he's certainly going to. He's certainly going to stop this punitive actions against some of the big companies, saying they're going to delist everybody. Because you saw the headline that I put out there. The chances are that U.S. is not going to delist companies like Alibaba or Tencent and stuff, which are valid companies with clean books and stuff. A lot of the small Chinese companies, let's throw them out. I don't care. But the real ones, fine. It's a big deal. So bottom line is, because that's going to hurt so many American pension funds, mom and pop mutual funds. They own these powerful companies. I mean, imagine delisting them. They'll just freaking collapse. They have like big positions in these monsters. Some of these Chinese companies, some of them. So obviously it's enough. All right, so let's take a look at Apple. Apple's like literally coiled to go and bust a move over 138 like no one's business. It's just counting its days. Now the stochastics are not that oversold right there on the slow stow. And on the fast stochastics, it's just about to turn. But Apple is, options are dirt cheap most of the times. And if you're going to catch those $6 move up in Apples on certain days, you got to be in it to win it. So from a daily perspective, and I know there, and there. Hands down, Apple's going to get at least to 135. If not, but the next time it hits its high, and given the circumstances that are coming up after January 20th and stuff like that, I would project out that Apple, if it enters this acceleration channel over 136, the stock has a fair shot to go to 146. And there was some news today that Apple's iPhone, here, it's right there in briefing, at 132 came out. Apple iPhone 12 demand looks robust, super cycle playing out with China key. I didn't make this up, okay? Wedbush Morgan said that. Look it up. Playing out with China key. I didn't even see that. Exactly. It's huge. Just the way Tesla is making billions in China and so many other companies. Why not? Apple will too. And it already has. And most Apple stores, almost all Apple stores in China are open. So what can you say? So Apple's a good-looking chart, good-looking big cap swing trade. Let's take a look at Nvidia. Again, on a daily basis, just grinding the range. So this one doesn't have a zoom feature, so I can't like zoom into certain things. So anyway, so where are we with this stock here? So let me just do a quick back of the napkin calculation. Right there, it's 548. They call it 550. We need to bust a move over 550. I know it's coming. It's on the upper end of the range right now. Stock sloshes around up 15, up 5, sometimes down 6. All that doesn't matter crap. The red line here is 530. That's your 50-day moving average, roughly, right there. If it breaks below that, okay, back to 500. You can short it. I wouldn't want to short, the monsters like this, but hey, people do. Now we have hit this upper end of the range 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 times. I think it's going to break out this time. I think the stock is going to break out so fast, so quick, and you're talking $20 increments. It's not a stock that's going to go up $100. Yeah, it can on earnings. So I think the stock is going to 570, which is the next trading range, 570 to 550. This is not rocket science, ladies and gentlemen. 500, 550, 530. So here's the 30-point range. And this red candle yesterday was because Intel is coming up with a new set of chips. So that's like, Nvidia's gain was Intel's loss, right, in the innovative front. But Intel doesn't do what Nvidia does. So anyway, so some money flowed out of Nvidia into Intel, just so you know. That's the reason we had that red candle yesterday. So this is the way I look at this stock from a technical standpoint. Overall, internals are fine. Looking at the simplest one to read, the STOs, all good, all good. Let's take a look at Netflix. Earnings are coming out next week. Where is it? Right here. This is
Tuesday after the close, Frank.
Tuesday after the close. Thank you, sir. Next Tuesday after the close, obviously. This stock is very tradable. This is what it looks like. The yellow dotted line is the pivot line. Want to know an exact definition? Look it up in Investopedia. I have it drawn very well, I think. And stock was down a lot. I told you guys to buy it. The 520 calls, and bang, it hit the upper end of the lower gap. This is the lower gap. This is the upper gap at 512. Don't be surprised if we have futures are up 12. Nasdaq futures right now are up 14.5. I wouldn't be surprised if it hits 520 tomorrow. Okay. I don't have no idea about Netflix earning. All I do know one thing: a lot of people did sign up for Netflix during this COVID crisis. I know for a fact. I've been watching amazing shows on Netflix.
And the price went up, Frank.
And the price went up. They raised their subscription fees, right?
$2 or $3, yeah.
No shit. Excuse my Chinese again. Sorry. Exactly. So what kind of revenue bump can they get? A lot. New subscribers, their price went up. Everybody's watching the tube, right? I even started watching some great shows on Amazon Prime. I'm serious.
And Frank, they don't have a lot of shares compared to other big tech. Outstanding.
That's another piece of good information. Okay. And for knowing the exact shares and all that stuff, I highly suggest the quickest way to find it is FinViz. Okay, FINVIZ, FinViz. It tells you shares outstanding, shares shorted. Well, not updated, but still gives you an idea. So please use that. So what are we looking at it here from a technical pattern? We're looking at a massive inverse head and shoulder. And I wouldn't mind, because it sold the ones which were the 20 calls. Today the stock was up. Those calls, the 520 calls, went from $1.50 to about $3.60. $3.60. So fine, I mean, I sold Netflix on the pop. So because they're this Fridays, even though I regret it because they probably go up tomorrow. But anyway, I can always get in. I don't want to play this week's one. I'm talking about next week's one. Okay. So bottom line is, I wouldn't mind if the stock even pulls back to 505, 500. Give me $6 or $7 pullback. Creates a perfect inverse head and shoulder, which heads towards 520. Remember, you do not necessarily want these type of stocks. I'm just letting their simple rule of the thumb, going up $20, $30 before earnings. The probability of a massive move after a $30, $40 run is low unless the company completely beats the crap out of the numbers, which they will. I wouldn't be surprised if Netflix is up $100. That's 20%. It's a low probability, but can happen. 10%, $50, sure. Okay, and let's keep politics aside. What, somebody's gonna say, no, I don't like Netflix, man, a bunch of leftist liberals, billionaires. Well, they got to be billionaires for a reason, because they had friggin' brains, and they still have brains. Exactly. So this is not a political ideology thing. This is about stocks. So this is a perfect, almost a perfect inverse head and shoulder. Here are your necklines. This first neckline is this gap. Remember, it hit that neckline, pull back a little bit. This is where we are tonight. Then it can hit the upper neckline, 525, and it breaks that. The stock, like I said, the stock can go 545 on a short-term basis. That's a lot. That's almost $45, $40. I'll take it. What does this look like on a daily? And that's the fun part. So watch. Now, Netflix does have a lot more competition, but their content is amazing. So, and like you said, they raise prices, which is a huge revenue booster. And if they sign up more subscriptions because of COVID and stuff, then you're looking at sizable moves. So this is what Netflix looks like. So I'm basing 545 on earnings, and if things really are blockbuster, then the stock will hit its previous high, which is 576. It'll go up literally 60, 70 bucks from this level. But we don't even know where the stock will be right before earnings on Tuesday. So we'll see. All right, guys. Like I said, there's a lot of stocks to cover, but it's 10:18. We started at 8:45. Any quick ones that I can look at? Redline, Mike, Paul, and then I'm going to plug fuel cell. They are on the hot streak. So made money on fuel cell today. Looking good. Those calls were dirt cheap. They were the fuel cell 19 calls were around $3.20. They went to 5, then pulled back and ended at 4. So let's take a look at plug. Now keep in mind that Plug Fuel Cell are heavily traded by everybody, but they're great companies. On a daily basis, there seems to be a very large sell program on Plug Power. Right there, you see today, stock at 74, still on an uptrend, but some massive selling came in. So you have to be careful about that. 152 million shares, which is the largest red candle on the sell side that we have seen. Otherwise, everything else looks good. So that's your short.
48.
You bought it at 48?
Right.
So great. So now you're up 20 bucks on it. So hopefully you took some profits.
Yeah, I
You
did.
know? So good for you, man. Awesome. Let's see here. FCEL is another one. Also a sell program, not that big, but right there, looks like there's somebody obviously know because these stocks are moving at breakneck speed. I still believe the stock is good for 26. This one is good for 26. There's a lot of these small companies which are going nuts, and that's, you know, I have a whole list of them, but I can't really go through them right now. All right, so ladies and gentlemen, any quick questions I can answer? Any broad questions?
Hey Frank, quick question.
Yeah.
Do you, at some point, is Tesla going to be a good short?
I have no idea.
Okay, I just noticed the reason I ask is I noticed the RSI is around 85 on the daily, weekly, and monthly. It doesn't mean it couldn't run longer, but that's getting quite
Let me
heated.
see. Let me see. Here's Tesla. Technically speaking, from it daily, Tesla is just creating another cup and handle. Just creating another cup and handle. Okay. Let me just look at what you said. All right. Let's look at this side first. Cup, handle. Tesla very soon is going to take out its previous high. It's going to $900. It wants 900. No question about it. Okay, just no question about it. One way or the other is going to go to 900. The options are super expensive, but it wants 900. Now, saying all that, let's take a look at Tesla's, and we have done this before. Okay, good. So that's a cup and handle, and which is targeting right now another 30 points, which it could get by tomorrow, to be honest with you, and it will certainly get by January 20th for reasons that we talked about. China-U.S. business relationship. All right, all kinds of stuff. And it'll drag a lot of the Chinese EV companies higher too, like NIO and, you know, all those, or XPEV, all going to go. So bottom line is, let's take a look at the weekly. Now you were talking about the weekly RSI or the daily?
Both and the monthly, they're all really high.
Okay, it doesn't matter if it's high or not. You have to look at the structure. Look at the structure of the stochastics.
Yep.
There's absolutely no indication whatsoever they're going to start. Once they start, once they start curving down a little bit, and you keep on seeing the prices going higher, that's called a negative divergence. There is absolutely, I'm looking at it from a technical standpoint, absolutely no idea. I mean, indication of that. Remember, when the stock was at, and this is very important, when the stock was at $585, this is going to answer your question. When the stock was at, actually, I'll leave it at my original screen. Hold on. This is Tesla from April of when the stock was $50 and Jim Chanos was shorting it every night, right? Good luck to him.
Yep.
This is April of 2019, not too long ago, year and a half ago. So it hit RSI of 93. You see that here?
Yep.
What was the price then, sir?
530. You got?
596.
596. Yeah.
Let's call it 600. Couldn't we have made the same assessment at that time that the RSI is at 93? How can the stock go higher? Well, RSI is at 96 and surging. It's called the open gap mouth. Okay, gaping mouth stows. The RSI is at 95. So when the RSI again on December 14th, on December of 2020, just a couple of days ago, December 14th, where was the stock? at the highs was 700, correct?
Yep.
Where was the RSI?
Sky high.
Not RSI was 94. Exactly. When it hit 885, where was the RSI? 95. So what I'm saying that the RSI alone doesn't determine. What I'm saying is it can continue for a few weeks, for a month or two.
Yeah.
Okay. You have to mix the RSI. Look at the is the McClellan oscillator severely overbought? Absolutely not. It's moving sideways. What's going on with the MACD? Surging. Okay, surging. So when you mix this and you mix the fact that the RSI has been above 90 since the stock has been above 90 since the stock was 575, 600,
Yeah.
you know. But let's take a look at the daily. Now the daily is buckling a little bit. See that? So daily RSI has now come back down a little bit. However, the MACD is not confirming any underlying momentum deceleration. It's not. However, the stochastics are trickling down a little bit. But it's every time that it's done that, it's been a buying opportunity. Even when it dipped down all the way here, the stock at that point was 640. But if you look at the overall external pattern, oops, sorry. If you look at the overall external pattern, this is not, it's there. It's still a cup and handle. It's like a bull flag, serious bull flag. So let's put it this way. Worst case scenario, 800. Best case scenario, 900 to 1,000. Worst case scenario, 750. Faster, the better. Hopefully, that's it.
Okay, very good. Thanks, Frank.
No problem. Guys, have a beautiful evening. Chris, Mike, Paul, Redline.
That's right.
Good night,
And
guys.
let's make it happen. There's a lot of good stocks out there. Try to buy some of the smaller names that I suggest, and hopefully they will deliver you lovely gifts. On that note, God bless you all.